Hello, fellow traders. It's me again, the Rumpled One. Yeah, another video for today. Keeping it simple. Um, the other video was on pivots, but I just realized I kind of break the continuity if I don't go through the normal screen. So I don't want to do that. So we got to keep it simple and keep the continuity. And as always, money and risk management, very important. Very important. Always focus on it. Don't take your eye off of that ball. So, let's see here. We've got 1, 2 pairs that haven't filled the gap. Everything else is filled. Remember yesterday, I get technically earlier today for some of the people, the first session of the week, the gap had not closed. And I think it was about 10 pips or so away at the time I made the video. But for those of you who are fading the weekly gap, you can once again see most of your trades are winners. Right now you might have, if you traded these two, you still have open gaps. And just looking at the day, and we've only have one pair that has a range over 100. As you can see, there's just some pairs just not much happening. Slow day. And you can see here we've got a couple of pairs that are making highs as we're watching. Buy zone traders, as we showed, were rewarded. And if you're in the London session or New York session, I think opened here, you can see once again you had an opportunity to take pips off the table trading the buy zone. Rat zone traders, you had the high put in, the low put in right here using the 1 hour candle. You can see here green, red, short here, right here at that last trigger point, the last trigger point of the rat zone. Any short entry in here is a valid entry. Doesn't matter what you use for a trigger, but this is where you have to get on, otherwise the ship is sailed and you are late and you're only asking for trouble. Because remember, most of the systems, or practically all of the systems and methods that I put videos out on, that I've created or adapted, have a statistical basis. In other words, I can show you with statistics rather than with some curve fitting back test that, these are profitable trades. The pivot point, that was the main thrust of that earlier video, but we have the open here, we have the pivot here, we faded the pivot, we traded away from the open towards the pivot, and there was about 25 pips to be had. Price action, I mean, you can see it here. What do we have? We've got a this is an interesting one though. Now let's look at this. We have a lower low and we have a higher low. We have lower highs, then we have a higher high, right? So you would think price would be moving up, but what's going on here? It's not. It's about ready to break that low, because you have green, red, that's a turn trade. So you see here, here's the high of that previous H1 candle. It went up above and it closed way below. It closed below the open. So obviously you would be you might want to think twice about going long, but you can see here it didn't make a lower low. It crossed above the 2240 line right here. You know, sometimes, to paraphrase Cool Hand Luke, nothing's a pretty cool thing to do. So you might not even want to trade this. It's not really giving a clean signal. It's telling you, on the one hand, it's saying, you know, on this price action, it's going up, but you've got a turn trade. So one thing says go up, the other thing says go down. You might stand off to the side and say, let me just watch, find something that has a clear signal. I mean, you can look here, you can say, yeah, it's making higher lows, but it's making lower highs. I mean, you can see it right here. Lower highs, higher lows, lower lows. It's just not that clean of a signal. You could just take, you know, if you forget all about the price action, you just take candle color at the line. Well, then just, you know, you forget all of this and you say, okay, we're going to just go with that green at the line. And you see what happens. Once again, you can overcomplicate things, you can overanalyze things, and then you can have the paralysis of analysis. Because you have to remember, everything we do in trading, when we put a trade on, we're guessing. It's a best guess. Yeah, we've done all kinds of analysis, but we don't really know what the market's going to do next. Anything could happen, something, a news event, and can completely change. So remember, the reason you put a trade on has nothing to do with the outcome of the trade. Those are some hard, that could be a hard pill for some people to swallow, but that's just the way the market is. And just sitting here watching this, you know, you can see that. Once again, we look at the 5 lines and we can see here green at the line, red at the line, you know, red at the line, reverse through. If you were at a lower time frame, maybe 5 minutes, you went this way. Here, went above and came back quickly. So once again, sometimes you have to be quick, sometimes you don't. Sometimes it pays a little, sometimes it pays a lot. You know, like right here, I paid a lot if you stuck in that trade. See there? So the whole point of trading is you just have to get what you can get while you can get it. I mean, you know, as the pirates say, take all you can, give none back. Once again, we've got the daily wick zone. Price doesn't like to stay in the wick zone. You see here, it even opened in the wick zone. Didn't want to be in there. Came out, went right through this 2 pip wick zone. Not much of a wick zone. It's almost a horizontal line trade. But still, price just didn't like staying in that zone either. And highest open, lowest open, you see the euro opened the week right here, came down, here's the lowest open, and look what happened. I mean, these trades are simple. Just try and keep it simple. But you see, if you try and do them all, you're going to get confused. It's like, well, wait a minute, I've got this, I've got that. Just take one. Just take, you know, a holo or a wick or a rat zone or a buy zone. You know, fade the gap, fade the pivot. Just do one and just do it every day. And hopefully it gets boring, but then it's profitable. We're not looking for action. You want action, go to Vegas. Play the horses, you know. But no, trading, good trading, is it fun? Well, not really. It's not meant to be fun. It's meant to be profitable. Now, that could be fun. You could make it fun, but, you know, doing the same thing over and over, I mean, really, good trading's like working on an assembly line. Every day you come in and you put, you know, part A in the box B. You put part A in the box B. You know, it can almost be mind-numbing. And that's something you don't want your mind to go numb. You want to be focused on what you're doing. But really, you want things to be repetitive. You want to form good habits, like what we always talk about back here. We want to form good habits. We want to keep things like that in focus. And for the squigglies, I know you guys, I'm almost doing this because I know some of you guys hate this as much as I do. So it's just my sense of humor that I show this. But, you know, if you believe in squigglies, then stick with it. If you're making money, more power to you. Don't let me tell you what you do. You've got to make that choice for yourself. Because it's trading. It's all about, when you trade, it's all about you, not about me or anybody else. And then once again, I modified the, a trader asked me to give them the ability to have the buy zone and rat zone. Actually, they wanted the rat zone for the week. And so what I did was I modified the TRO HL5 indicator, and I gave them some options to, you know, how far off the high and low, which will give you the rat, and how far off the open you should put these. I just decided to update that indicator so you can customize it via inputs to do what you want and show what you want. See, we've got the weekly there, but we can actually change it a couple different ways. Let's see. We have 1 week. We can switch this over to the daily, or we can switch it to the current, and it'll do it for whatever. So here we've got the daily. We've got the buy zone. See here. There's the sell zone. Right there, so you can see it was in the buy zone, came down. And then we've got the red rat zone right there. Got the green rat zone. Once again, just keeping it simple. And the only true chart, the tick chart. In fact, I've thought of something. I'm going to probably be working on this indicator here. And what I'm going to be looking for is, you see, this is the ask and this is the bid. And when the bid gets above the ask, usually price right here, that low, that valley. And then see, when the ask gets below that peak, the bid, then there's usually money to be made. And sometimes it's only a pip. So, but it's just real interesting. So you can see here, you know, if you took that trade on that click, you would have gotten burned. So, but it's just something I want to look at and see if there's an edge in it some way. I think there possibly could. Or it could actually be a reverse indicator, meaning don't trade this way. As opposed to trade that way, meaning short or long. But anyway, that being said, fellow traders, remember, it's not what you trade, it's how you trade it. TheRumpledOne signing off to go drain the banks.